Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. A question that I'm asked a lot. In fact, I spoke to a group of brokers in Washington, D.C. In May, and I speak to local realtors. They're going, well, your business model is based on about 95% of your people buying from out of state. In other words, they're buying from overseas, from Malaysia, from South Africa, from Israel, but they're also buying from California and Washington State and elsewhere. And so the question is why are they doing this? Why are they buying out of state? Why don't they buy in their own local markets? Well, for one reason, in terms of something that costs $150,000 here, might be $1 million in San Francisco. So you're not going to be buying $1 million property in order to get positive cash flow in San Francisco. And so your local market may not be conducive for that. The second thing is that, markets change, and there's certain markets also that are better than others, or may basically benefit your investment philosophy. So, for instance, the people who buy from all over and buy in Oklahoma City are people that want predictable, boring, safe cash flow. In other words, they're not looking for the big score. They're not looking to cash out in 5 years. What they're looking for is income that's offset by things like depreciation, improvements, and repairs. So they get basically some tax-free money, or tax-deferred money is really what I should say. Now, they may not like other markets like Las Vegas or like Phoenix or like Orlando, Florida, because those markets are more volatile, and you have to understand that. So when you're in those markets, they may be more of a timing orientation. In other words, right now, I wouldn't recommend people buying the Phoenix market because it's not in the timing cycle, and there's too many investors, and there seems to be always, once market recovers, too many investors in the Phoenix market. And so you're going to be buying high, but you're going to be renting low because supply and demand affects you. So the reason why you buy out of state is to find the right market, say a market like Oklahoma City with low taxes, a market that has reasonable insurance, one of the most affordable markets in the United States in terms of buying something that gives you anywhere from $300 to $500 a month positive cash flow after property management and everything else. Now, I'm not saying that Oklahoma City is the only market that's just exactly this way, but the combination of ingredients that we have makes us one of the best markets. And so if you're looking at these markets, you're going to go out of state because you're not going to be able to buy things in your own home. Now, that is certainly the true in terms of residential property in the big cities in California, and it may have that way elsewhere. Not saying it's the only place to buy, but the fact is people look to areas like Oklahoma City because on a long-term scale, it builds wealth with lower risk. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.